Well, looking at the economic news out today of Kenya, Kenya's economy expected to expand by about 6% in 2013. That's up from a growth rate of 4.6% last year, driven by a pickup in sectors like agriculture. We've got Wayne Wagaru, the Cabinet Secretary for the Ministry of Devolution Planning, and attributed the outlook to a stable macroeconomic environment and increased investor confidence. That's after a peaceful presidential poll in March. We've got John Matao, who is standing by now from Kenya. He is joining us from the Institute of Economic Affairs from Kenya, and he's going to run through some of the numbers that we've seen today. Thank you so much for joining us today, John. So if you're looking at the forecast for growth going into 2013, it certainly is much stronger than 2012, and Kenya looks like it's starting to come in above expectations, some of the expectations of around 5% growth. But give us your view in terms of some of the key sectors that have started to outperform relative to what the market was initially expecting.
Thank you. Actually, from the results that were released during the launch of the economic survey, it shows that Kenya's growth just improved slightly from 4.4% in 2011 to 4.6% in 2012. Now, the sectors, actually all the major sectors of the economy, from agriculture, transport and communication, wholesale and trade, hospitality, all those sectors posted positive growth. Mm-hmm. Now, going forward, it's expected that if the agricultural sector improves in 2013, then studies have shown that the agricultural sector tends to contribute hugely or significantly to the growth rate. So, as much as we've had some sectors that have been resilient over the last 5 years, especially the construction sector has been resilient, mm-hmm. When other sectors like electricity, communications were struggling. The sector that is likely to contribute to growth, because studies show that for every 10% growth of the agricultural sector, it tends to contribute to 1% to the GDP, mm-hmm. then that is likely to have a significant impact on the overall GDP.
Mm-hmm. Given the fact that we know the Eurozone is still mired in a recession, we've seen some slowing growth figures coming through from China, and then, of course, perhaps some positive news from the US. But overall, what we are seeing is this prolonged, sluggish global recovery. How does this affect the Kenyan economy right now? Is the Kenyan economy becoming less reliant on global growth dynamics? I mean, are there more Africa-specific, factors that are starting to play into growth now?
Yes, obviously with the situation, the economic situation in Europe, and Europe is actually, EU is one of the major markets for our horticulture and the flowers and horticulture and other agricultural produce. Then obviously Kenya has to diversify and find other markets in the medium to long term, but as well as continue to maintain the same conventional or mainstream markets that we've always had. Mm-hmm. So this slowdown has actually affected even our tourism in terms of the arrivals. Actually, the number of tourist arrivals, I think, slowed down. So we expect that for Kenya, the growth to improve in the next 2 or 3 years, is need to sustain publicity and marketing, especially on tourism, as well as diversify our export market. But again, hope that the economic situation in Europe will improve.
And of course, holding back potential growth right now, which is still sitting at a robust 6%, is what the forecast is right now for 2013. Thank you so much for joining us for that, John Matao, Program Leader at the Institute of Economic Affairs in Kenya.